Breakfast Club. My name is Darren Hancock, and here we are on the Wednesday, the 11th, I guess it is, of September 2024. Hope you guys have been having an awesome summer. We're starting to get into the fall months now, so this is where it starts to move, man. This is where we start to get some action. This is where we're expecting the markets to give us a little bit of a bump into October. This is going to get really kind of odd now when you consider the elections just coming up. So who's propping up the market? Who's manipulating the market in their favor for their votee in the States or their nominee? All right. Let's have a look at where we were yesterday on the daily. Let's load this up nice and big here. So yesterday, we're looking for, I think, a 1 hour mean threshold. Today, it looks like we hit it, just over it, and retraced quite a lot yesterday. You consider, let's just go into this. Let me unlock that first. And move it over a bit more. Look at the retracement we had off of that mean threshold on the hourly candle. So we're going to go down to the hourly here and see if we can find a reversal around the time we're looking for the reverse to happen. And then we were talking about the mean threshold of this candle right here, this longer down candle. So let's blow it up a little bit bigger, and we'll see where this thing ends up. You take the wick of this candle, and we called this before anybody else did. So there's the 50% of that wick. Didn't even reach it. 25%. We're just over the 25% of that. So you're looking at that area there for a possible setup for a reversal. So when we get down to the hourly, we'll have a look for a reversal there. So I mean, I tell you, you got to look for these upside objectives and then look for those reversals at the right times. Look for the reversals to start setting themselves up. So you could have caught this huge run back down here now, and then you're looking for a specific reversal at a specific time. London low, the low in London perhaps. So let's get down to the 1 hour. Get rid of that. So this is the 1 hour mean threshold we were looking for. Now see how the body's traded right into it perfectly. That's what we marked out on the chart yesterday. That's the potential upside objective. So here's a reversal right here. Stretch this out a bit. See this candle here, drops below. The very next hour, trades right back up into it. And you get the rest of this fill on the fair value gap there. So you would have caught 2 hours, 2.5 hours of run into this fair value gap here. You get another reversal right here. Body trades up above it. You come back into it right here. And then you run out. Ooh, your stop loss would have to be here still. You run up. You came all the way back down, give you a little bit of a fright this hour or last hour. And then finally take out the highs. And running back up into the daily fair value gap above us. Old highs here, and we have regular trading hours. You take this. block. Get that whole wick on the rejection block. Let's see where that I'm going to have a look at these levels right here inside that regular trading hours gap, not so much the wick right now. I'm just curious to see it with this regular trading hour gap that we're in. If we end up using any of these levels. Just a curiosity piece than anything else. Remove all these. Just move them, I guess. For potential reversal back into this hour closes above here. We get back into this candle and leave this piece open as a breakaway. I'd like to see it just come back into here, leave that chunk open, and continue pushing higher. And 1 minute chart. So higher for today. Hit those upside objectives and we'll start seeing if there's anything around 10 or lunchtime for a reversal. We're right back up inside here. So we're really between these two premium and discount arrays. We're going to start compressing now. And it's going to start making up its mind of where it's going to go. It's going to bust through here or bust through here. We got equal lows below us. And we have equal highs above us. And we're pretty much in the middle of the range. So look for one of these to give way before running for those highs or lows. You have to go down to the lower time frame to see what path you're on. I'm not going to dig down that deep for gas right now. The crude oil we'll talk about in a sec. So natural gas over here, we're approaching those equal highs above us. We got a couple of equal lows below us. We've already claimed this fair value gap as an inversion. We're through it. We came back, reclaimed it, and then went higher. Looking for those equal highs and the mean threshold of that candle we talked about yesterday. Gold we'll get to in a second. $8:30 this morning. Reversal, took out this low. If you just look at the 8:30 hour every morning, reversal, trades back into it, runs for the high, runs for these highs. You pay yourself accordingly, obviously. You got another reversal right there and here, all in one candle. Look at this one. You finally trade through it. You come back inside it. You gotta look at the range you're in. You're past 50% of that range. So look, expected this a premium for a discount. If you're looking to run back into filling this fair value gap below us here, Look at this order block, this last cluster of candles here that took out that low. You're just coming into the top of it, so you make it a retracement back up into the high, and then either go lower. You'll see how it reacts off of this one here, or this little tiny fella here, and inside this fair value gap. That's the key level you want to see it return to go lower. This just pop into here. Again, it's not, unless it's in the premium level that you can expect a discount run. I'd wait for it to come back up to here and see how it reacts in here first before either going higher or rolling over and coming back down into this range here again. That's Bitcoin. We have a reaction off the consequent encroachment so far. So either you're going to expect this level to give way, this mean threshold to give way and start pushing higher today, or that mean threshold to hold and roll over and continue coming back down into here. I don't see anything in here that wants a reversal. So my anticipation is soybeans will go higher, and you're expecting it to. Remember, we're talking, we wanted this to remain open. So far, we're getting that reaction off that. I want to see it continue pushing higher today. Otherwise, if we lose this, then I'm neutral on soybeans until something cleaner sets up. All right, we've come back to this level we talked about yesterday. We said we wanted to see a CAM Model 1 entry, so we've got the CAM Model 1, get the gap at the top, and you're getting a bit of a reaction of it now, so we want to see these highs gun for. It hit our level perfectly in sugar, what we were looking for yesterday. Look at that, what an awesome bounce off of there. And if you zoom in, you'll see the reversal as well. Where is the reversal? I don't know if you guys are trading commodities, but I'm giving you some real big hits here in commodities. See how we trade above it here, come back inside the consequent encroachment, and then you continue to go higher. I don't know how much that's worth to you in a commodities market, but if you ran from here yesterday, when we were looking for a run back into here, and you would have bought that long at 1841, and we're now at 1888. I don't know how much that is in terms of run for these old highs here. Quick trade. I've never traded commodity markets, trading it like a commodities trader. How much that's worth per handle or contract. But if you were running for those highs, you would have made yourself a nifty little coinage. Now, if we can get the reversal back into this candle, even that daily fair value gap high, and start pushing higher, I want to see it start taking out these other highs here and return back into that fair value gap above you. Coffee. We've been calling coffee like Michael does. Trade lower, trade back into it, hit our objective, hit our objective. Now, you're in a small range between here and here. One of those now has to give way, break free, make this market reach for the lows below you. Or they got to go gun for the highs. You have relative equal highs above you, relative equal lows below you, and you're sitting just above the midpoint. This was more like the midpoint. And now you're running back up into the premium area, looking for a run on the highs. So I want to see this now climb up on top of this. Otherwise, we're stuck in between the consequent or the mean threshold of this down close candle and the mean threshold of that candle, which we opened on. Tap this inversion, and we're back into this order block here now. And we took out that little high, so it's a breaker. Come back, find some support off this breaker now and start pushing higher. Cattle, equal lows below you. We've traded all the way back up into the fair value gap. Here, this breaker that takes out that low. And we've gone lower. So I'm looking for these double lows to get taken out. Next downside objective is the drawn liquidity is this inversion fair value gap on the daily below you. All the time this fair value gap holds, this inversion here, we trade through it. We trade through it once. Back, we're reclaimed bearish fair value gap. Reclaimed bearish. I might have that wrong. Trying to get the exact terminology. Michael seems to get quite upset with live traders not saying this stuff with, you know, the appropriate terminology. So I'll do my best to stay with the terminology I'm familiar with. Cocoa. 12 minutes, we move along here. Cocoa, I want to see. Took that low. We did say we took that low yesterday. There's a little fair value gap there. We've come back, we've traded into it. You see that? It's a little bigger for you. So we traded back into it. We talked about this yesterday. Trading back into it, you hit it. And now, today, we're trading up and through this. So I want to see this one get cleared through and that order block there. Find some support in that to keep going higher. But there's your long right now inside this range. Pulling your fib tool. Whatever method you're using to manage this inside here now. If it's just that high of the fair value gap and you paid yourself, good for you. You got yourself a nice little trade there. This whole day, you got a nice little run up 60 or 53 cents, 55 cents or so. Lumber is still heading to our objective down here that I'm looking for. And lean piggies, we're still looking for downward. Do I have a downside objective? Nope. We need to lose to 25%. Come back into 25%, take out this low, and use this order block to get some support off of, or the equal lows here to find some support to keep pushing lower. Sorry, I'm with that. Gold. Let's go with hourly first. This was the upside objective I was aiming for a while ago. Oops. Reverse that. I do it every morning, don't I? There you go. Bodies respected that candle or that upside objective and slam. Get right away from it. So the downside one I'm interested in. would probably be somewhere around here. These equal lows to get taken out. If they find support, look for a drive down into the discount right down in here. In gold. Right now, I'm looking at this one here as the consequent encroachment. Draw across. See how that consequent encroachment assumes to hold price. Bodies are respecting it. Wick. We're through 50% of this wick. Good look on the lower time frames for that one. Oil, let's go to the daily on oil. Finally took out all those triple lows. Been waiting for months now. I was hoping that we'd be gunning for it right here. No, it wasn't. Sorry, I apologize. It was back in the beginning, in April, May somewhere. I think when we're coming down here, I was looking for it to start gunning for here, and it reversed on me. There's no reversal here. You don't get an opportunity to catch the reversal there on the daily. So you look for this candle here. It finally trades above it right there, trades back to it right here, and then you trade deeper into the range there. But you see that's already past the midpoint or a run inside this range. But either way, you still get the run for the highs. And they just took them out right there. That candle's high is 84.46, and this candle's high is 84.52. So it just took out that high. You catch a little reversal. There's a little tiny one in here. If I open that up nice and wide, you probably see it. I can see it right there. This candle's high is, you have to go on the lower time frame to look for it. The high is 82.72. The low is 82.72. High is 80. Well, it's not, they were like bang on, so there is no swing there. We have a reversal here, but on the wrong side, like a BISI on this side. But you trade back inside that. Stop losses here. You trade back into 50% of this wick. The bodies respect 50% of that wick once you've taken out that low. Bodies respect it, so take your fib tool and look right. See how the bodies respect the 50% of that wick. Once you've taken out the low and you trade back into it, you don't want to see the bodies get above that level. The wicks came back to this imbalance above you here, into the rejection block. Wicks do the damage, and then you proceed to go lower. inside this range, discount array. Filled, and all of a sudden you see it close below. You go, we're heading for here. It guns for that. You look for the reversal here. You don't get an opportunity to get in on it there. That's your first objective. And then obviously into this range here, and look at this fair value gap. As soon as it takes that high, you see this reversal, then you see that pullback. I think if we trade below that, then we're going lower. We trade below that one and that one. We start marching back into the opposing one that sent the price higher. So you've got this overlapping one here and here. You want to see that get taken out of the downside and then reverse back into it to continue on the downside. So you close below it here, you trade back up, don't get an opportunity to get short, and it finally takes out the lows. Inside this range now, you've traded all the way back up to this inversion or this small imbalance right here. And then we pull away. We have no high taken out here. So you just look at these as fair value gaps that have been taken, and they literally just keep driving straight through and down. That's the daily. So now there's another wick over here. This is the next wick. I've taken out those lows till we start getting a higher pushback. 50% of that wick, we've just wicked through it. Bodies are still respecting the first 25. And let's see what kind of retracement we get here. Do we get a reversal here to come back down and take out this low and dig deeper into this wick? And the surgical one for Christoph, we traded above, came back, found support at it. So that's our upside objective next, using that equilibrium or consequent encroachment of that whole range, the equilibrium of the range. Its array, which is the fair value gap, using it to continue going higher. So I like to use these fair value gaps like wicks. So imagine them like wicks. So all this stuff is the noise that sends it to the next level. Those are the holes in the rocks that you want to climb onto. That's how I kind of look at it when you kind of bring them forward and say, that's the rock face I want to step on to go higher. And then you can also use obviously your breakers and balances and all that other stuff as well. All right, let's get back to here. To the bottom of that regular trading hour gap I've outlined there from when did I mark that one out? That was the 6th. hit right off of that. Look for a return back into this CAM model 1 here. We see that go lower now. Coming back into this range. Did we push all the way up into that? There's CAM 2. 3 would put you somewhere in just shy of 3. Oh, it's coming up here. So look for a return into here, this order block here, and see if that holds price. So they're looking for this, and I'd like to see it stay open. And roll over and come back down again. Good morning, Hadid. Happy CPI day. Good morning. Shepherd, Craig, sorry. I don't hear anything. Oh, let me check, make sure my, yeah, my sound's on. I don't hear anything. Good morning, everybody. Joe Mack, Russell, good morning. Courteous, Drayton, good one indeed. Enter on inversion by value at 765. Good morning, Campioni. That's the little tap off the bottom we're looking for. I want to see that start degrading now. So I'm stuck between two different directions here. One, to go lower inside this range. If that be the case, then I'm looking for an area of interest would be something like this level here. That's a CAM 3 model. As soon as it takes out that low, or sorry, rejection block, move to break even and pay yourself. Look at that whole range. I don't care. I don't know if I don't care. I don't care what model you use to manage it. But there's 50%. That should be moving you to break even, pay yourself. I gave you a perfect entry right there. A CAM 3 model. Downside objective. So sorry, I was saying, so you got this reversal here. You've got this reversal here to go higher. And you want to see it hold on this cluster of candles here as the downside objective to go higher. That's why you got to pay yourself inside here. So just from that perfect entry I gave you right there to 906 down to taking out that low. That's 44 handles. And keep your eye on this objective here. You can travel anywhere inside here, right to the bottom of that. And that brings us back into a discount. Obviously, optimum trade entry reversal if it does proceed to take that out now. So I'm looking to see how it acts inside this box. I want to see this fair value gap used as a propulsion to go higher. Like when we come back, if we trade through it and come back to it, I want to see it propel with explode to us with some force to the upside if we get through it and use it to run higher. Percent. Did you pay yourself 50% from here? 906. So you got 60, 50 some odd handles just in that 3 minutes there. Watch here now. See how we're still inside this candle? This was the whole query of, are we going to go higher off this to go higher, or are we using just this as a little cam model 3 entry, come back up? Let's see how it acts inside here. Coming back just up to the leave a last little piece open. This would be really good for a bearish response right there. Not fully filling it and just gunning it all the way through here now and start extending this range down into this box. See how that little piece left open doesn't fully fill it? Good sign for a retracement down into the box we're looking for. Beautiful. Very lovely price action, my friends. Very lovely. Okay, so now this feels more heavy for me. We're through this breaker here, this collection of small candles and wicks. We are through that, and we're into the discount array. So how we act inside here, I'd like to see us dig down into the lower portion of that. Let me get this out of the way now. So right now you're into 62% retracement inside that larger range created right now since 8:30. So if this is a optimum trade into reversal. So you take your 50%, move it to, or your break even, and move it to 50%. Take off a portion at 62, and now you'd be out of your trade here. So you would have had from 906 to 807, 99 handles right there. 99 handles. And then on your first, or on 10% of your trade, and for the other 90%, oh, you had half taken off here, take another 10% off there, and then you would have got taken out there at 30. So you got a nice chunk of handles there, probably averaging over 50 handles overall. Again, we'll see how we react off of here. Now just start coming right back down again. If we pop through this, look for this and this candle here to provide support to start running through these highs again. And there you have an optimum. Even if you're on the wrong side, if it's bullish for the day and it continues to go higher, you caught a nice little reversal. I showed you a nice little reversal here for a retracement trade. But if you just wait, Michael's teaching patience and wait till 10 o'clock for the range to set itself up. Then we'll just wait. If you're new to ICT concepts, he's putting on a new mentorship for 2024 for his kid Caleb, and he's teaching you right from the ground up again how to trade his methods, and they're his methods. You can argue it, you can try and go for the $1 million prize of trying to prove him wrong, saying that he stole it from somebody else. You'd be wasting your time, but hey, there's some people that are motivated enough out there to try and make a quick buck, trying to prove somebody wrong. So good luck to you. He's codified this stuff. It works. We show it every morning. I may not get the terminology 100% even after doing this since 2016. I look at the patterns, all that other technical verboseness. That as long as I'm pointing out exactly where I want it to stop, why it's stopping on that specific spot, should be proof enough for you guys that this works. So we wanted it to come up to this area here. We were watching to see how it responded to that. We want, as soon as you saw that, as soon as I saw that not fully fill that and start to pull away, we're gunning for here. It hit that. We want to see it run back up here, hit this, find support off of this, and start coming back down. The fact that we keep revisiting this now, that low, or maybe leave that little piece open and start pushing back down. Anyway, I want to see how we react inside this level down here. I want to see it pop through, find some support, and start running for these lows down here. And dig back into this weekly fair value gap inversion. Then at 10 o'clock, reverse it, take everybody on the downside, reverse it against them, and take out these equal highs above us. And dig deeper into that regular trading hour gap from the 6th. Yeah, Dow Jones is dropping. See that? It's reacting off that daily fair value gap right now. Or new day opening gap. $786. 795, 786, 795. Oh, okay, right inside here. So far it's acting exactly as we wanted it to. Is Michael putting on a show this morning? ICT, what is he up to? Yep, he's live. If you're here and you want to see the legendary Michael J. Huddleston trade the markets, he's on there right now. So don't waste your time with me. That's the guy you want to see. Even though I'm calling it like a freaking demon this morning. You can get his perspective. You'll get obviously the actual language as it's coming out of the horse. So can't get it better than that. Consequent encroachment of that downside. Objective. Now I want to see this start to really eat through here. You can't ask for a better 50% of the perfect cam model entry there. That's a cam 3, a beautiful cam 3 right there. So you've got 907 and you're already 105 handles up. If you would have looked in this one here, you would have been 113 handles almost. That's your day. Your day could be done right there. Call up Derek, go golfing. SMT with ES. I still never use that SMT thing. Yeah, I see it. They've all taken their lows except for NQ. They've all taken their last hour lows, but NQ hasn't taken its low yet from the last hour. That 50% there, that's the 50% level of that wick. So we'll see how we act off that. But we still got another 10 minutes. So I'd like to see this low get taken on the last hour. They all get back in sync. Unless they start taking a lower low. And Dow Jones has already taken its London low. NASDAQ hasn't, and neither has so ES, the Dow's taking the London low. ES looks like it's looking for the London low. And NASDAQ hasn't even, we're just hanging on that 50% of the range right now. But of, sorry, 50% of the hourly wick, last hour's wick, which is right inside our discount array. Look at that equilibrium. 10 more minutes. So we have these equal little pool of liquidity out of here. This little fair value gap's been filled. We're back inside this fair value gap here. See that? Right back into the consequent encroachment of yesterday's opening fair value gap. Now, oops, I want to see how. If we decide to run back up into a premium array, that little box you see above you there is my upside PD array. I want to see it get in there. If we're staying inside this range now, if this guy's holding and we find support above here and this candle, and we start to push higher, I'm looking for a run back up inside here. That would be another 100 handles. Oh, I've got the Bee Gees going through my mind this morning. I watched a show the other day that had them going through there. All right, tippy tappy on the bottom. See how we get even just, I love seeing the candle come down, tap it, and you get a reaction off of it. Because that tells me on the 1 second chart, it's come down to the discount array and it's moving back up inside that 1 minute now to a premium array. So anywhere inside that candle right now, I think on the 1 second chart, that's coming right back to a premium array inside that 1 minute candle, and then it's going to start gunning it back down again. So you look at 50% of that wick. Is that going to hold price? Are we going to start pushing higher now? Is it giving away? Run through here and use this box here now for support to go lower. Watch where the bodies end up. Wicks can do some damage. And that consequent encroachment of yesterday's fair value gap of interest, it's 50%, lines up with almost 50% of that wick. I don't know. Maybe I'm clutching at straws, looking for too much perfection. %50 of this wick here. See how the bodies are respecting it? Right there. Wick came down, filled the imbalance or the downside objective. Now I want to see this climb out of here and start taking people. We got 5 more minutes. Maybe we'll make one more attempt to get down below these lows and this low here. Gun for that and then see if we get a reaction. I'd love to see a nice little reversal off of here. So if you're running from here for your downside objective, which I marked out here, 907 to 777 is 140 handles. So perfect entry, perfect exit. If you held it that long. You even got a reversal back into here and then another reversal continuation. I think I'm on Michael's 18th video, so I'm quite a ways behind. But I do like to catch up on what I've been saying and what he says. And he's really focusing a lot on wicks and the power of wicks. So that's what I'm trying to focus a lot on now. That's a new piece of the puzzle. And describing what order blocks and how fair value gaps are not all created equal. Mean threshold here. Consequent encroachment. %50 of that wick we talked about here. You want to see that really give her out of there now instead of wicking around down in here. I can see all 50% of these wicks holding price. So I want to see if that now starts to really lift this out of here. Because they're all kind of overlapping, 50%, 50%, and I want to see if this 50%, I want to see if this is got some validity to these wicks and how they're being played off of. See if this goes higher or just blows through the wicks for some reason. Oh, there you go, just blew right through the wicks. Came right back up inside 50% of that wick. It's almost like when we talk about from discount to premium arrays, one of them has to give way if you want to. If you're compressing, they get smaller and smaller, and you have to bust out of them. And you got from 50 to 50, and you're in this little range, and now it's got to bust out of here. Come back, find some support inside this range, and start pushing lower now. Even though we're still inside this, we just took a little tiny wick below. We've already had a body above, and just little wicks below. But the fact we're coming down multiple times into this inversion gives me a feeling that it's heavier than it looks. These equal lows gunning for them for 10 o'clock. Look for a turtle soup here. And I'm not really good at turtle soups, so take that with a grain of salt. It's 10 o'clock. I'm going to say quickly gun for down here now. I want to see a big bold candle get through here, create a little fair value gap. Move that out of the way for a sec till we see the wick form. Remember, we're talking about 50% of the wick. Get a reaction off that, come back down. No. We're not creating any fair value gap reversal here yet. So we're just coming back into this to go lower. you'd have to clear this high and use that for support to go higher again at 50% of that wick. And that's not a setup for me, so I'd want to see a reversal happen right at the bottom of the weekly new week opening gap. Oh, Hadi's back on his 15-second run. Yes, Hadi, yes, yes, yes. You got one here. Wait for that to get taken, though. This could be just a little bear trap or a bull trap for you. So watch these two candles. You want to close above them and use them for support. We've traded above it here. Because if you're trading above this, you're looking for the high, and that's the high right there. So if you were to, you've already cleared out the high, so you want to discount inside this range to go long on. We have not got a body above here yet. See how that little trap can hook you in? You want to see that pop above here first with a close. Ideally, I'd like to see these highs get taken. That's pretty small because all you're gunning for next is this high and that high there. So they're not really big ranges. So you're definitely inside this fair value gap here. This one here has already been traded through in two. So if you're trading here to here, you've got yourself 64. Well, you got yourself 33 handles just in 45 seconds right there. You're trading off of this and you're aiming for that high again or rejection block. They're like 72, 92, 20 handles in 45 seconds. When you're down at this level and you're super sniping, that's the small little ranges you got to play in. We haven't got a body above here yet, so wait. This could just roll over and come back down. So 1030 is our crude oil inventories. There you go. Now you traded above it. Come back, find some support, looking for this to go higher. You trade back into this now. You're looking for that to go higher. And see how there's this fair value gap here forming. So watch that. You've taken out these highs here. You got relative equal highs above you. You've just traded. So now you're stuck between this small range here, this, and that. You want to see that give way on a close to come back into the range. You want to see this hold price and start to find support. So look right here. You want to see it get on top of this right here. Start pushing for these highs here. Yeah, there's been some really good opportunities here, Russell, from on the 1 minute chart. If you're managing that, how you manage that on the way down. See how we're trading below this candle here? Trade back up inside it. You want to see this hold price now and start coming back into this range. So if you're trading this on a 15-second chart, you're looking at these small ranges. That's what you're gunning for. And you got to be happy with a 15-second chart. Looking for 20 or 30 handles is pretty amazing. But you really got to be observant of levels. And if it starts to get muddy in here, wait. Just wait. At 10:30 is a news release. So we're up inside here now, and you've traded below it. So you're expecting that I'm expecting that to come back into this range here now. You got a little low right here. Now if you stretch this right out, there might actually be something in here as well. And we're below it, inside it. Still looking for that to go lower. And it does. So if you see these equal highs and you waited for those, and you didn't see the reversal, as we pointed out, then your entry in here is now getting back to you're breaking even, and now you're underwater. If that was your entry, so you got to look at this and say, I want to see that get taken on a close. It does. See, great. And if it comes back and taps it and leaves, that'd be ideal. Run for these highs. But you got to keep this in mind. Now that we've taken these highs, you look for that fair value gap there, and you go, well, if it trades below that on a close, which it does right here, you go, oh, I'm on the wrong side of this. When it comes back up into here, the ideal entry is short right there, inside this range, from a premium to a discount. And there you go. There's your premium to discount. Perfect entry would have been right off that consequent encroachment of the one we've outlined, the higher time frame PD array. So that was 97, all the way down to this discount array right here, the 67. There's 30 handles right there in a few minutes. So now you've gone from premium to discount, back up to premium. See how it's getting smaller now, even in a 15-second chart. You want to see this discount one give way to go shorter, and you want to see this premium one give way to go for these highs here. And you're in the middle, so what do you wait for? Which one do you think it's going to be? And if you know for sure, you're gambling, because I don't know for sure. See how it's just gone smaller, 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 smaller. And we may go sideways here until this oil inventory is released. So when you're in the middle of that range, 50% is right there. So you are totally gambling if you think that's going higher or lower. Go back to a 1 minute chart. We like to see these lows get taken out. We've come back up, all the way back up inside it. Didn't fully fill it. Traded below it, inside, below it, inside. And now we're looking for a run for these lows here. And finally take out that low below us and get back into this weekly inversion or weekly new week opening gap, higher time frame low. Now somebody may have said, well, you didn't know where it was going to go for sure here unless you use a higher time frame to give you a better bias on a direction, and you got relative equal lows below you. And we've been working this upside, and we're just constantly trying to probe the upside. Mean threshold, see that? Consequent encroachment of the wick. We've hit it. Coming back into this candle here. And the bottom of the fair value gap daily. Or is it a new day opening gap? Anyway, it's the daily. I know because the color blue. We're bouncing off of that. Now I want to see this really gun down for these lows. So Hadi, if you're trading that, you could have hauled yourself, 60 handles out of that. If you would have traded that, just keeping your eye on those perfect little entries and exits. And now that we've got below this discount array down in here, we're going to use that discount array to continue to leverage and go lower. And you got to be watching that. You got to spread your charts out so make it look like it's bigger, so you see it cleaner on your 15-second chart, and look at the small ranges that you're working inside. Good morning, Dave Barry. How are you, buddy? Michael's running today. He's running today. He's talking. I'm not sponsoring these guys. I'm just going to tell you about them. Have you guys seen these new bottles? They got these little, not that that's the important thing, but it's a bottle that sterilizes your water. We bought that so we can go, when we go to Thailand, whatever water you put in it, you just hit that, and it's got this ultraviolet light that kills bacteria in it and makes your water drinkable. So I know water's a big issue when you go traveling, so we thought, oh, we might as well buy ourselves one of those bottles that sterilize the water for you, and it cleans your bottle. It cleans your bottle out because you get bacteria can go inside your water bottles as well. So it just put that thing on. It's got a little plug-in USB port that's got a battery built into it. I'll let you guys know if it's any good. If I start puking my guts out because I drank the wrong water, I will not be promoting those guys. Anyway, we're looking for again, continuation on these equal lows. Now let's go to another higher time frame here and see if we can see another objective on the hourly. Yeah. Up here. I got your objective you've been waiting for. Yeehaw, we got some support through here, and we kept driving lower. I love it. Love it. Into the hourly fair value gap now. Into its consequent encroachment. It seems to, yeah, no, I thought it was overlapping something, but it's not. Will you post a link to that in the Telegram? I could if you want. I'm not a big fan of promoting other people's products, but if it works, if you want me to post it to you, then by all means, I'll put it on Telegram. I'll send it to you. You can get them on Amazon. Your ICT 2.0. I don't think so. But thanks. It's quite the compliment. But if he was here right now, I'd be shaking his head. Okay, so through the weekly fair value or weekly new week opening gap, We're through the bottom of it, coming back, just tapping on, knocking on heaven's door. I love the way we returned all the way back up. How many people noted the regular trading hours gap from September the 6th? Look at that. We came up, hit it perfectly at the bottom of it, and continued to go lower. How many people had this on their charts at that level? Do you see how it literally popped over the daily fair value gap right to it? And that little mohawk, people might say, oh, it's a mohawk. It actually returned right to the exact price of that regular trading hour gap. And then we got a reversal. We looked for this CAM Model 3 entry. It was a perfect CAM Model 3 entry. And if you've been holding that since that entry at 9:07 this morning, you are over 200 handles. You're over 200 handles into your day already. And that's my problem. I would have been inside this range, trade that out, use the fib tool on the way down, that 62% retracement, and then it took us out. That would have been me. It's holding for the runs on liquidity. That's where I'm still trying to work on. We're done our hourly fair value gap again. We've retraced all the way back inside the hourly. You see it right here. We've retraced all the way back inside that, cutting through all of this stuff. In the hourly, it's right there. So now, do we continue to revisit the daily below us, get through that, and then start aiming for these wicks? Look for 50% of the wick. And there's obviously something else, another objective down here from before that we're aiming for. I'm wondering on a lower time frame if that's going to come into play for us. But if it just hammers right off of that daily fair value gap and then starts to retrace, look for retracement here now. Look for this reversal. So I'm looking for an opportunity now to catch a reversal. So to know that you're not going to get caught in a trap, look at this range inside here. If we can get above here and start trading back into that, that's what you're looking for, 50, 62%, so on and so forth. And if you can use this to get support to go higher again, you can get back in for another long into a higher range. Right now, you want to see this get taken to the upside just to get back into the small little range here and see what happens. If it doesn't, and it's just finding support off the bottom of that the week opening gap, then looking to go lower. Is that a new week opening gap or a weekly fair value gap? What the heck is going on there? It's right. Look, do I even have that marked off properly? No, I don't. It's there. What was I thinking? It's right here. Wow, that was bad marking, people. Bad marking. We have another one right here, a Bissy, and we have this Sibby here. Let me just stretch this out. Press it down a little bit so you can see it. That's the week. We have this one here to here and here to here. We've traded through this, back into this, wicked all the way up. I want to see support off of here now, and then a continuation on the downside. And make sure I get these right here. This is a weekly, daily price imbalance. That's what that is. And then we have the weekly, and we have the daily is correct. This daily is here. I like that one. And we've got this new day opening gap price imbalance / liquidity void here. It's only a one-side delivery. We've had multiple runs through it already though. So looking at that level of that wick, 50% of the wick. I think that imbalance is going to get revisited. I got that lined up better. How long have you had your regular trading hours up on your chart? Beginning of the week. I put it on the beginning of the week and see how those regular trading hour gaps divided into quarters are traded into. I know he likes to say take your regular trading hour gap and extend it out through the rest of the day and see how many times it gets hit. So if this was our regular trading hour gap right here today, oh, right up there it started, right? Look at how the consequent encroachment of the regular trading hour gap lines up perfectly with the consequent encroachment of the opening fair value gap. It's amazing. Oh, we got that wrong. Stand by. I might have that wrong. Let me redo that. Regular trading hours. No, that's right. That's right. So we're seeing that kind of reaction we get off of here. Returning to this order block, see if that provides support. No, it says above here. There's the 9. $909. Fair value, yep. 909. Sorry, I don't see a 909 fair value gap there, Dave. Relative lows. 18,586. Yeah, so far we've just come back inside here. You want to see this get taken and use this candle for support to continue going lower. If not, you want to see that provide support and go higher. Get through here, take that high, find some support at this, get back into this range. My friend Hadi is probably like, look at the 15-second chart. It's screaming at you. So consolidation. We ran above, come back inside. Cam model 2 right there. That's probably cam model 2. Nope, not quite a cam model 2. You're still in a cam model 1 to here. Then you want to see that continue going higher now. You don't want to see this fair value gap give way in that order block. You want to see that continue to provide support. You want to see this guy here, climb up on top of him, find some support, start pushing for the high and start digging back in here. That's your level that you want to see support price, and it's building, it's working its like self inside this fair value gap and the top of the consolidation. Now you want to see it rocket out of here. The news, that's right, 2 more minutes. You don't want to be sitting here trying to catch the wave on that one. Oil also has a fair value. You've got a reversal set up in oil right now. We're expecting new oil inventories right now. So we're into 50% of that wick on the daily, the 1 minute chart. Let's see if we can see this reversal here. We have a little tiny one here. So we've just ran above it right here. We've traded back into it. And now you want to see if it guns for these highs here. 50% of that wick. You want to see that, see if that holds price. We've now got a break in structure to the upside. Right before the news release, do we slam it up? You have a reversal. So if you're taking that high, you pay yourself at that high, move to break even, wait. If you want to catch the wave, the surge, and this doesn't snap back and take you out first before going higher, at least you got a piece off there. So if let's say this was it right here, and I'm not encouraging anybody to take a trade here. We got 1 minute, 15 seconds left. Highs have been taken, but we're back inside this range. So we're going to pretend like we've got a, you've made some, oh, it took you out. See? Rip right through you. So it's a good thing to pay yourself off these little reversals, because right now you're getting your butt handed to you if you didn't. Right back into this little tiny imbalance and through it. Now you're looking for the rest of that wick to get taken out below you. Back into 25%. See, the problem with that news release is the fact that it snapped down here like that. You may not have been booked anything inside here until way down here. So you could have been, your stop loss, any profits you would have made on that little run up there, could have snapped back and took all your profits away and finally booked down here somewhere. It's like Michael says, that painting of that brush, the little open spots in between. You may not have actually booked a price inside there. How is that affecting our NQ? Reverse. Got a little high taken here. Reverse. Body trades below it. Watch this candle right here. Trade back into it. If we can get back up into that, look for further short now that we've gone through the daily price imbalance. Downside objective again. Remember that old one? I think we're looking at on the hourly. Yeah, this is that old one. And you see how we can come back and revisit these old imbalances? Or discount arrays. Right now the bodies are sitting right on the bottom of the daily price imbalance. Keep your eyes on this level here. You got to get above here now to get back into that range. The cam model 1 there. It probably displaced down below it, came back inside it. And you're really between this one and this one, so you have to pop through it. Take this candle here on the downside. This one was good. You drop below it right there, and you retrace back into it here for continuation. Hadi's a 15-second trader now. He's on the 15-second chart, clipping coupons. So we act inside this old one here. So this is where I look at these ones and go, if you're holding that from there and you had the courage to hold through all this, you're 300 handles into your day already. That's 300 handles right there. And 30. Hadi's like 15 seconds. Watch at the 15-second chart. Low. You traded above it. You're in it here. Take that high. find support off this high, start pushing up inside that range. You're inside here, so you want to see this body get above here on the 1 minute. And then trade back into it inside that range. You want the discount portion, so you want to see it come all the way back down and nice and deep into that. I'd like to see it come back to that consequent encroachment of that daily price imbalance and then push higher. Right now we're just getting a wick back into old low. Hourly fair value gap imbalance, or the inversion, I should say. The roll over and go 15 seconds. What did you get in that? So there's the high taken, little reverse, drop below it, come back inside. Do we run back inside this tiny range now? That's why you have to extend your charts and treat them like, oops. And treat them like, see how that, you've got to be able to keep your eye on this stuff. You're inside this range, premium, discount. You're already at the discount already. Should be done. And see how it's so small there, but it's still trading those patterns, right? It's still trading that simple pattern recognition. Taking a high, look for the BISI, trade through the BISI, trade back up inside it. There's a small fair value gap here as well. Inside this range, discount array, trade all the way back down inside that. So 35. So you're looking at 15 handles or so. So body's traded through here. You want to see it trade back up inside this candle now and start really digging through into this fair value gap and start digging through this to reach lower like that. All on a 15-second chart. Come back up now, find some support inside here. Leave this open. Start pushing lower. There you go. Left it open, pushing lower. If you come back up inside there, you want to see that stay open and keep pushing lower. Oh, it's already taken the lows out. Okay, so it just took the low out. That is completed. That little trade model is completed, done. Now you wait for your next setup. See how that's all happened in 15 seconds, and we called it as it was happening. What we were expecting it to do is exactly what we're expecting it to do. It did exactly as we asked or expected. Not we asked. It's not responding the way, it's not being told by us what to do. But if you recognize what it is you're looking for, rinse and repeat in your mindset, constantly keep looking for that. And that's a really good example of what we're looking for on every time frame. It doesn't matter what you're trading. That's the simple reversal setup on fair value gaps that I like to use. We did not get a reversal over here, but you see how your 15-second people could have been still clipping coupons inside here, trading the same model over and over and over again, if you got the cojones to do that. So you've traded above here, you see your fair value gap, you see it trade below it right here, you trade back up inside it, you get short, you take out your lows, and you wait for the next setup. It's a trade above you here, holds off, trades lower, you got a reversal here, you trade back into it right there, aim for that high, you get it, you wait for this one, trades below it, comes back up it, you aim for that, you got it. So you're just nibbling profits in and out of here if you could actually have the intestinal fortitude without the emotional stress of dealing with those. And you got to trust them. Watch them over and over again on the 15-second chart, 5-second chart. Watch how it repeats itself over and over. So beach time. Enjoy your day, Mr. Pips, on the beach. Previous day's low. Right here. 18.59, 18.590. You got 18.582. I get 18,590. Unless it's this one here. That's the previous hour. That's an hourly low. 82. Yeah, right here. This is obviously the previous day, September 10th. Yeah. So the next low is here on the hourly, and the next low after that is the 82. 582. Correct, Mr. Hans. I see nothing on a 1 minute chart. Yep. What I like about this model is even when you're wrong and you're trading against the grain, you're still catching it against the grain and getting back in sync with the market again. So you see it reverse, and it's telling you, I'm changing directions, I'm changing directions, I'm changing directions. Again, trying to shake you off, but you're just riding the horse. Riding the horse. Staying on the horse, man. That's all it is. It's just staying in price action. 582. We've gunned all the lows now. Equal lows here. Where are we headed to next? Regular trading hour gap. Let's take this little baby and move it across. See what kind of levels provide us some entertainment. Let's see if I can get, sorry, I'm going to pull that over so I can see it a little easier. I'll put it on that candle there so we can see. On 1 minute chart, we'll see where our little 629.5. There's 25%. Wonder if you get 11 a.m. reversal. Darren, you're the best. No, Michael is the best. There's many people out there better than me, but thank you for thinking so. Or are you okay? Are you feeling sick today? Well, as long as you're getting something out of it, Hans, that's all that matters to me. We're just in it for we're just in it for the clicks, for the likes. And I got 6 today, according to my little thumbs up button down there. I got 6 people like what we've done today. That's good enough for me. I'm okay with that. Oh yeah, that's right back. Let me get rid of this one here now. Remember that downside objective we were looking for? We ran through it, came back right into the consequent encroachment of, and continued going lower. So those old little boxes I like to put on my charts that we're aiming for, they do get reused, man. Those levels are still part of the algorithm. They still come back with precision and hit them. Like, you know, see how we've left that last little piece open of that fair value gap there? That's also in Michael's videos, recent videos, how he talks about you don't want to see a full fill of that. That's a really good positive sign for a further downside run. Now, if you had the balls to hold this from the top, 907, how many handles are we into now? If we can get down into, we hit this all-time low here, that's 400 handles you've had this morning. How do you like your breakfast? Hearty, me be always. Hearty. I heard this joke yesterday. These guys were sitting in a tree stand waiting to do some hunting and they were cracking jokes. One guy says, I was assaulted the other day by a guy with cheese and butter and milk. And his friends are laughing. They're like, what? How did that happen? And he goes, how dare he? That's one of those dad jokes you got to tell your daughter. How dare he? How dare he? Cheese and butter. I love it. My wife is just laughing her head off. She's like, you got to listen to this one. And it was her behind me there. How dare he? Sometimes I'd rather listen to you when I just want to learn about price action. Michael today is talking a lot about mental aspects of trading. I usually click the like button when I get here. Well, Campione, thank you very much. Yeah, I think the mental aspect of it is so important. And I'm a great example of years of not doing what he was telling us to do back in 2016. And it's the damage it does to you if you trade live. Like, I started trading live within a month of starting to learn. I was so convinced that what he was doing was like genius level stuff that I was like full on, and I was buying live accounts. And we're not talking, this was before any of these prop firm accounts started coming up. It was full on live, just putting thousands of dollars in and I'd blow it. Thousands of dollars in, I'd blow it. I just keep doing that over and over. I paid for my mentorship in the School of Hard Knocks, and he said, don't do it. Wait for 2 years at least before you start trading live. Nope. I was throwing money at it like I had a great job. I was getting paid well. So I was dropping thousands of dollars at a time into and I was a single guy, so for me it was a blast, man. I was loving it. So it's a lot of damage if you start trading live before you're ready, because then you just get the jitters. You get in and out so quick because you've been punch drunk, right? You've just been hit so many times. You're afraid and stagger every single time instead of trusting these arrays. So this is why I'm in front of you guys now, years later, trying to show you the setup that I look for. And it's a constant reinforcing into the psychology of my mind that, look, you can hold this a little longer, look for your higher time frames. These lower time frames you can key off of to go lower. And this is another example this morning of, had I held that trade at the perfect entry I gave you, we'd be like smashing this right now. And if you're putting on there the kind of stuff Michael puts on, like 35 handles, that's a $100,000 trade right there, right? So psychological damage, it's important. When you listen to his video today, it's very important that you listen to that psychological aspect as well, because he brings some serious truth to that. So don't skip over that portion of it, because the mental game, that's what the ThetaWave Trader is. I'm not the ThetaWave Trader. I'm aspiring to be. It's a theta wave. It's trying to get your mind into in hypnosis. We have that theta wave state. It's the peak performance, the peak mind state that your brain gets into for optimum change and focus. That's the kind of trader you want to be, that theta wave, that ultimate. This is so boring. I just see the same setups every time. I'm going to trust it's going to go here. I'm going to have my fail safes. I'm going to have my personal, the protection in there to save my trade, and logical levels. And if you move your stop loss, you'll move it to a logical level. It says, okay, time and price says it should not get above here. But that's what Michael says. You've got to be in the charts every single day, and you got to be studying it every single day. And if it does the things we want it to do, and we say, okay, I want to see it leave from here, and it does, you just go, it's great. I understand price action. I'm starting to really get a good grasp of it, right? And I know how he likes to go on these rants that all these live people don't got a clue what they're doing. And that's why I'm like, okay, let's do this on a 1 minute chart. You'll see if I'm full of shit. I don't know what I'm talking about. And I've been doing it for just over a year now, calling a 1 minute chart every single day. And yeah, I don't get them right 100% of the time, but I know when I'm on the wrong side of price action now, just by watching each candle, watching what level is important. And they're the basic arrays that he's taught you in every candle, every range. And I always look for every single little, and I look for these little tiny swing points as my little range. What's my order blocks above and below? What's my premium array? What's my discount array? And I like the inversion. I like the fair value gap as I understand it right now. And if he's got more to give me because I don't understand fair value gaps, then fair enough. I'll learn it as I go. But right now, what I do know about them is showing me some stellar stuff. And if you watch how we called it this morning, and with that CAM Model 3 entry this morning, we talked about that before it happened. It wasn't something I made up after the fact. I told you what we were looking for, and it literally nailed it to the handle. So, and we've called it a lot of little entries and reversals and 15-second charts. So I know the understanding is fractal as well, because we're doing it on a 15-second chart, a daily chart. We've been through all these charts, calling it the exact same way and getting similar results. Now, the psychology is the important part. How do you guys manage your psychology inside your trade? Do you look for your lower time frame objective or higher time frame objective? Get in on the lower time frame, then switch over to your higher time frame objective and say, this is where I'm aiming for the day. This might be the reason I get thrown off, is because I literally am in the trees and I keep getting smacked in the face with branches. And then I go, okay, I'm looking for that reversal. Now it's done. And really all it's doing is just retracing back into a range for an optimum trade entry to continue going lower. That's my evolution, as it were. So I can really appreciate the psychology that he's trying to teach you, because that is just as good as any golden nugget he gives you on trading, is to get past this. Because when you understand it, and I understand price action pretty well, I think, why am I not a millionaire in this? I mean, in this level of trading. Because I still got to get past all that damage I did when I didn't listen to what he was saying years ago. We're talking 8 years now, right? And you just nibble little pieces out, and you look at these massive victories you could have had. Look, we're getting down to almost 400 handles this morning already. You imagine having the cojones to hold that right from our perfect entry up here this morning down into here, and saying, there's a new day opening gap. You got all this cluster. Remember, he was talking about how when you get a cluster of overlapping PD arrays, like new day opening gaps. That's the drawn liquidity. There was nothing in so much inside here, but man, oh man, was there drawn liquidity below us. Look, you got new week opening gaps, new day opening gaps, wicks, price imbalances. They're all sitting below us. If you caught that one this morning on the CAM 3 model we gave you, you're over 400 handles when we get past 507 here. As soon as we hit this new day opening gap, that's 507. That's going to be just, no, it's 508. So it's 399 handles. It's craziness. Craziness. That's like a whole week's worth of trading right there, just this morning. So we're coming into that consequent encroachment. You have to change your belief system, find what you must do to become and remain a consistent. Yeah. I understand what I need to do. I have to, the next thing is, one thing is to know you have a problem. Two is to recognize where your failure is. And then three is the hard part, is the courage and the resources, mental resources and mental capital to fix it. Simply saying stop doing it is not fixing anything, because there's an internal drive that causes you to, it's a fear factor. It's something you can have one side of you. In hypnosis therapy, we have this. Have you ever had a problem where you look at something, you go, part of me wants to do this and part of me wants to do that? And we have two different beliefs. I'd like to do this, but my gut's telling me something different, right? That's confliction. That's like what we call parts integration, where you have to find one part of you supports old beliefs, one part of you sees a new belief, and then you got to try and find how to bring those two parts together so it keeps you back in a congruent way of thinking. And that's the challenge. It's not just simply saying, well, I know what the problem is, I just got to hold on longer. No, it's not that. All right, so we're getting near that 50% of that range. I like this here and that candle there. If you want a real good significant reversal, I want to see this consolidation above us get taken. But right now, inside this range, you've got this little PD array up top here. From here up into here, taking that high. So we'll see what kind of reaction we get. We have a displacement out of this consolidation. It's 11 o'clock, my friends. It's time to retrace back into the range 50 to 62%. That is not an everyday occurrence for sure, but it is a probability. So here's our displacement at 11 o'clock. There's 11 right there. So we're above. Get back into this, and I want to see that start to go higher now. That's just a CAM Model 1 entry. I want to see that take out this candle and that fair value gap and that candle for confirmation, even though we're coming back to a CAM 1 model. I'm still want to be more sure than just a CAM model. If you're a CAM model trader, then and that's your model that you like to trade, 1, 2, and 3. There is no 3 here, by the way. There's just a 1 and a 2. Because you have to consistently work at it, even when you don't figure it out. This is true. Developing good habits and keeping them with self-discipline. Yeah. what does Hadi say? Let's go to the Hadi level. This is going to be my new Hadi level. So same kind of thing. We have this traded through now to the downside. And now we see this reversal right here. Trade back inside it nicely right there. Look at the body's loving that, giving it a kiss. Trade through, taking out the highs. You've got a reversal here. We've traded through it here, come back up inside. We're back inside this range here now. That's why I want to see this get taken out on the upside, because you're between. See how the bodies are respecting it? Just literally sitting on it. And then you get a little reversal, drop below it, come back up. All this has been cleaned out, and we're just trading back into here. So looking for that cam model. Now you may look at this as consolidation, that is consolidation, this whole thing is consolidation. That's entirely up to you where you want to draw your consolidation model. I do like from here to here. So we'll see from here to right there, from here to here. We want to come back into cam model 1, all the way down to 50% is cam model 2. I want to see now it climb above here and get above this level. So those two overlapping, that one to go higher, this one here to continue going shorter. And I don't want to see more than 50% of this get taken out, because that just brings us back into here. And that little fair value gap below us right there. So I want to see this really start getting some juice. Give me some juice. Oh, jus. And we'll go back to that if that... The Hadi level. Come on up. Come on up. Yes, perhaps the setup is forming. I like the way you're thinking, Russell. Yes, 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 my friend. Rejection blocks. They're good old things. Have we traded above it? Yes, we have. Lovely. If we come back, give a little kiss right there. There's the reverse. We've got continuation to the upside right here. Give it a kiss. Away you go. Start running higher now. And pull your range, fib tool for your range, 50%. Look for that from the range it was created from the low and the 11 o'clock. Reverse starting. Back inside the range from the high of the day, the morning, which is way up here. Look at that as your 50% overall objective you're looking for. Otherwise, keep aiming for this one, this one, this one, this one. Just look for those to climb up on top of them. Manage your fib tool on the back end, whatever way you want to manage it. So now we're taking this high here. We found support off of this. Look at that right there. Body's just loving it. And we're going higher. So you got your reversal now. That's Hadi's 15-second chart. Let's go back to the other one. And let's look right here. Now you're hauling pips out of here, or handles out of here. I keep saying pips. You're hauling handles out of here on Hadi's level. 15-second. The Hadi principle. Lunchtime reversal. Oh, don't forget, we could see one more little dip below here yet. Look at the range you're in from here to here. Pay yourself on the way up, my friends. Pay yourself on the way in. I just gave you another nice, beautiful reversal. You had a nice, excellent reversal here. Look at that. Delish. You're coming up for almost another 100 handles out of here alone. Cam Model 1, people are Loving this. You're up 570, almost 670, and there's almost 100 handles there, just in that little 11 o'clock reversal. And Michael says we live traders can't do this. Come on. We just gave you guys some killer trades today. Killer trades. You're out of here, Dave. See you, buddy. Thanks for all your work. Appreciate it, man. And thanks for inviting Derek into our little moment. Thank you. Hadi's got almost 100 handles today. Well, you should have almost 100 handles out of that cam model, or at least out of this reversal here, or take that candle out there. Oh, you wouldn't have got that one. Did you get a reversal back into here? Let me look at this one here. Oh, it literally closed on it, opened on it, and left. Come on, Hadi, make me happy, man. I want to hear you got 100 handles today. And you move to the sidelines, and I want to see you strutting. You do the peacock when you get home. Burr, burr, and then your wife's going to say, what are you doing? You can just like, I'm peacocking, baby. You know, Michael likes to do that, strut around the house. And you nailed it by studying price action. And in the charts, you stayed in the charts, you stayed in price action, and it did exactly what you wanted it to do. Plain and simple. I don't give a shit how much more complicated you want to make it. If you look for it to do exactly what you asked it to do, and you stay in price action like that, then I don't care what model is pumped towards us, you have found yourself one that works. Now, stay with that consistently. Do not get greedy. Do not let the psychology get inside your head. Just keep trading your plan. Look at that, right to that close right there. Did you pay yourself at the close? You started in at a 15-second chart. We moved back to a higher time frame, 1 minute chart, and there's a higher objective inside there. Pay yourself. Back into here, 573, all the way up to here is 666. Oh, the number of the beast. You're all the way up to here. So you're just shy of 100 handles there, just using a cam model 1 entry. Seems to be the day of cam model entries, 1 and 3. Oh, lovely, my friends. Lovely, lovely. I think we stay on Hadi's level. It seems so much more exciting. Come back over here and look at what level you want to see support price, and where does it fail for you? Where does this fail for you? Ask yourself that question. Don't forget your underlying levels. So keep looking at your underlying levels. Look at the range you're in. Look for reversal. We've taken out old highs here. We've retraced all the way back to that 1 minute perfect exit right there at 666. And now it's turning on you. Did you pay yourself at that? You coming right back. We've now filled this fair value gap here. Now, what do you want to see? Do you want to see it come down even further into that? Or is this a level of support you want to see? There's a premium array right here. You want to stay inside that premium array? Draw it out, man. Just draw it out. Keep your eyes on these cut through candles. Don't buy any of that bullshit about you can't cut through candles. Look at that. Find support off this and start going. If it doesn't, you get on the other side of it. Fail for me. And now we're getting back deeper into this range. So watch, see where that ends up. And that's on a 1-1 candle. 1-1-1, 1-1-2. These next three are like, from back when you were listening to my earlier stuff. It's like the squabbling sisters. One of them will make, on these next 10, 11, and 12 are going to make a high or a low. The squabblers, they'll just argue back and forth. Who's going to make the high? Who's going to make the low? So this is the 12 candle that we're on right now. Or is this the 12? No, this is the 11. We're on to 12 now. Nope. 45 seconds. Here's the 12. So here's our 11 candle. 10, 11, 12. 10, 11 does the low. Now we're pushing through here. I love it. Inside our level. Where does it fail for you? Right there. If it fails by closing below that, come back into it. Then you're coming back into this range. If not, push through here. Start running through this candle. Find some support at that candle, these highs, and start pushing higher. Oh, look, we're pushing higher. Did that make sense? Did that deliver with perfection? Or what? We've now extended past the range. So this little retracement, I would like to see now. Let's add something more fun to this. Not that this is absolutes, because these are not absolutes, but out of curiosity, this is where I like to go, okay, now what would be my upside objective? What would I be gunning for here? I'd go like this. I take the low, and I go, if this was the next price leg up, if it was the next price leg up, this is where I'd be looking for price. Oops. Mia. Now we called this at 11 o'clock, so this none of this. I gave you this beautiful rundown this morning from up here, all the way up here. I gave you that perfect entry, 11:00 or 9:07, and now we're oops, and now we're giving you this 11 o'clock reversal, 11 o'clock consolidation, CAM Model 1. We said this is where it would fail if it dropped below us. It didn't. Found support. Now pushing higher. I'd like to see us get right back up into, and look where that lines up, the next price leg. Full fill of this fair value gap right here. You want to see this could come back into here, hit this. This is the climbing the rock, the steps. Now you're using the steps to climb up. And those steps align with the holes in the wall, the wall. So you look at these holes in the walls on this side, and do they line up with the steps that you're creating on this side? And if they do, then you're in price action, man. Morning, Lauriston. How you doing? Yeah, Hadi's been watching. He's learning extremely well, and he's catching these dynamite runs. So we're trying to get him 100 handles today. I want to see you put a big 100 sign up there, Hadi, with big smiley faces. Throw up some hearts. Bells and whistles. Let's celebrate your 100 handle. Let's celebrate your 100 handle. How far are you away now? I'm excited for you. That's awesome. Keep asking yourself, where does this fail for you? Mm-hmm. 1 minute chart. Fair value gap. Relative equal highs. See that fair value gap here? Look at that, right inside it, below it. Finally traded through it, and you didn't get a chance to get on it. You see that? On the 1 minute chart, you couldn't have got on it if you were looking for precision. But on the 15-second chart, ooh, Hadi is dancing and dancing. That's the highs. Pay yourself at the high. It's okay to pay yourself at the highs, my friends. It's okay to pay yourself at the high. Oh, look at that. And it lines up. The next price leg lines up with close to taking out or reaching this old low back here. Okay, so there's over 100 handles there already, Hadi. There's 120 handles right there. Reverse, keep your eye on this. Order block. So we trade above it. Come back, smackety smack it. That's the breaker you want to look for right here. You know, right there. Watch this. If you trade below here, we're coming back into this range again. And we just did. So now you're looking for this to run back into this range. We have a fair value gap here. Take your fib tool, pull it through here. Where does it fail for you? We just ran out those lows. So if you're looking at this one here, let's look at this real close. See how it trades below it here? Trades back up into it here. Takes out the low. Small little tiny range, right? Now you want to see it climb back up through here. Get on top of that. Start going back higher. Get back in beyond sync. So this just ran back into this, taking out this consolidation here. Taking out those lows. Now you want to see it climb back above here and not just trade back up into this and go lower. So if you're holding this on the way up, and that's my upside objective, and don't let that be your absolute, but that's the price leg I'd be looking for to go higher. But always be prepared for when does price change on us. So if we've just come back into this to go lower, watch this mean threshold here. You want to see that whole price right now? That's your line in the sand. You don't want to see it come lower than that. And you want to see it get above here. So we're back inside that breaker. So you want breaker to be supporting, blowing through this. If the breaker gives way, now we're getting back into that range. And welcome to the lunch hour beginning. So I've given you two objectives that we want to see fulfilled. See how that mean threshold was lost? Right there. It was lost, traded low, come back up inside it. So this is more bearish for me now. We're still inside the breaker though. So you want to see this still hold price. If it comes down to the bottom of the breaker, the top of the fair value gap, leave that open, have as a breakaway gap. We got a little breakaway gap here. And see that continue pushing higher. Retail thinks that's a bull flag. You want to make sure it gets back above here. Otherwise, we've got a reversal that's occurring. We see the reversal. And if you're holding this long, you're looking over here at that dollar sign and you're going, I'm losing money. Ask yourself, where's your fail safe? If you're worried about how much money you're losing over here, you have not got a plan. You're worried about money. You got to be looking at your plan. And we said that this reversal is happening. So this is eating up your profits now. So you're going to see that number going down and you're going to start to freak out. Well, where does it fail for you? Does 50% of this range fail for you? If I take out that low, does that fail for you? And you're willing to give up all that profit? Or did you see it early enough to say, hey, look, now I'm out. As soon as that occurs, I'm out of the trade and I'm going to wait until I see a new setup to go long and aim for that high there. So if you were going long on that and you said, well, that was our fail safe right there. We had nothing up in here. That was the fail and it didn't. And it stayed right inside that level that we were looking for over there. Supported it, kept going higher. Here's a reversal. Ooh, it broke that low. Okay, it came back up inside it. We want to see it keep going. Nope. Fail safe is right here. Failed. Now we've got lower. Now we're digging into that level like we talked about. So you say, as soon as that shows me that that's a reversal, that long, you take off where the reverse is and wait. Or if you're super keen and savvy and you just love trading and you get on that short, you're in a short, the stop loss, pay yourself here, move to yourself to break even and wait, because now you've got this low taking. You see this fair value gap forming here and a level that should support price inside a range that should support price. We want to see that give way now. And if that doesn't, see the breaker over here, gone. So I say bye-bye to you. And yeah, you could probably use it again later, but we're just going to stick with this now. Did we hit 50% of that range? We hit 62% on the Beezer. Right on the Beezer. See that? Now we've traded above here, come back inside. Now you want to go back higher. So your fail inside that range. So those are the questions I want you to ask yourself. If I want to continue holding. So this is kind of like for me as well, questions I have to ask myself. That's why I'm asking you. Where's your fail safe for what are you willing to tolerate a loss on? Now, if you're really smart, you can stay in price action. You can take that long off, go short back to 50%, wait for a reversal to happen, then get in on that to either go longer. And if it fails, as in this is doing right here, stop loss would be here, you would have been taken out. So now you wait for a new setup. So you took that run all the way up to there, caught a run to here, and took a loss right here. So wait. Get back in sync with the market now. If that did not take that wick out, where it opened, came back, you would have had just, nope, you wouldn't have got an opportunity to get out at break even. So now you got that low. I want to see this high get taken out here now. If not, we're dig deeper into this range. Watch that piece right there. See. Still found support off this candle here. 62%. Start really climbing up here now. Find some support above here and here. With a close, a nice displacement candle to come back, find support at it. Then you're between this discount and this premium. So that's where you'd be aiming for. And if you hit it, pay yourself, wait for it to get above it, use it for support, and continue going for your higher objective. And we want a big displacement candle, right? Give us a big bolt. No, you didn't want to see a wick. Did we get above it? Literally closed above it. Tap it. Look at that. Open right on it and start moving. I'll come back, give us a kiss. Give us a little bit of love. Come on in, give us a bit of love before you go. Now you got to get above here. Taking out that liquidity there. That guy there, you see it right there? You traded through it right there. And you didn't get an opportunity on here. So you look for that one. Traded above it. That's good. Now you want to see it come back, give it a little kiss here. If you don't get that, then we look for this guy here. If it displaces above, look for us to come back into that candle. So this is another one of those, where is your fail safe for you? What's your level of support that you're willing to take all of that loss to continue going higher? If you're trading in this 15-second chart and you can see the reversal coming back into here and then see the reversal to go back higher again, and you can stay in that chart, you think about how many times you could trade that. Not that you want to, I'm just saying, how do we stay inside the chart? When do we see price changing direction? When do we see a break in structure to further downside run into a range where you see an optimum trade entry reversal? Where do you see your reversal forming? If I stretch this out here, now that we've seen that low get taken, you look on this side over here for our reversal. We got one imbalance right here. We got another imbalance right there. So if that's our first SIBI imbalance, body trades above it, we trade back. Look at that. Right inside it, right there. And away we go. Do you have the eyes to see this? Are you sharp enough to be on the ball in these imbalances, trading back into them and continue going higher? And we haven't even talked about wicks. We just look at imbalances. And now you've run for that high. You pay yourself there, pay yourself there, pay yourself above these equal highs here, and rejection block. And you do not get rejection block there, I don't think. So reverse, trade down, back up inside it. You want to see this keep coming back inside this range now. See. Now inside this range, where's your fail safe inside that range? See how the 15-second chart is just giving us a faster idea of what's going on all the other time frames. This is a fractal analysis. Look how it came right back up into that senior array we were talking about. Discount array, premium array, that'd be the one I'll be aiming for. I told you about that right as it was happening. Look at the body. Hit it. We have our little reversal. Come back inside it. Takes this low. Small range. Takes a low. Now, do we want to get above it? Find some support at it. Start pushing higher. And all we do is come back to old high. Inside that range. Old high. Hit it. Now you want to get through here, which you do right there. You tap it, and now you're going to go higher. Look for rejection block, old high. Reverse right there. Take out an old high. This way you got to be quick. Catch this stuff really fast. See it right there? We did not get that high, but we do get this high. Swing, reverse, back inside, go lower, take these lows, get back into this range now. I didn't see that. I was gunning for the highs and missed this guy right here. And it came back all the way through it. So we're like, why is it coming back? Oh shit, yeah, right there. Trade through it again. Now start gunning for the high. Takes that high there. That one's done. Rejection block. Middle of the wick. Support off of here. Go higher. Good. Take out the 50% of that wick. You've got that taken out now. We've got a reverse here, potential reverse there. It's hard to stay in this price action when it's getting this choppy now. That's good. This is fun. This is fun. 25% of that wick is about there. That would show weakness. If we just hit that and just cave down, that's good. We're up at 50 now. Yes, carry on through, my friends. See how we found support off this? Trade above it, come back, find support, push higher. And now we're back into our little friend over here. We ain't done yet. So now you've got that high taken. Looking at this here. I want to see 50% of that wick, no more. Not a full fill of this. I want to see that stay open here. Start going higher. Right. It did fill it. Okay. Trade below, inside that range. Where's our discount guy? We'll fill the fair value gap. Mean threshold. If it takes this one out, now we've got much lower. Wouldn't want to see that take that low. If we start closing below this, then we're starting to look for that reversal and this candle here to get taken. If you can't get it on it here, I look for this guy here to close below it and find support at this, come back into here to continue going lower. Right back inside this breaker, takes these lows out. Mean threshold. So that one's just left open. That's the fair value gap's left open. And this is nope, I'm coming back to fill it out. Still want this mean threshold to hold. Or your CAM model 2. If this is your consolidation. Here's CAM 2. You don't want to see a body get below that, so if your stop loss is there, CAM 2, if a body closes below that, you're out. You want to see that go higher now. It's been a CAM model day today. Is you 729 level bottom of the 15-minute wick for 845 candle? 15-minute wick, 845, 845. Nope, I'm not. Oh, 845, sorry. If you're in a 15-minute chart here, that's a reverse. You haven't got a chance to get in on it yet. If you get a body trades above here, it comes back inside that to get long. You're looking for this large range here. Look for an old low here, 50%, 62% inside that range. Stay inside that one if that's the one you're trading. If you're already in on a 15-second chart, and you want to come back to a 15-minute chart, I'm still looking for that upside objective right here, which is the bottom of that fair value, or that old low on the 15-minute chart. And it's also this breaker right here that takes out these highs. And our 15-second chart. ID, this should be you should have 100 handles by now. 50% of the range, 18,738. This was just that next price leg we predicted. I'm done for the day. See you tomorrow. Oh, did you hit your 100 handles? We've been waiting for you, man. Did you hit your 100 handles or what? We've been all sitting on pins and needles to see if Adi got his 100 handles. And voila. There you have it, folks. The next price leg. Done and dusted. Have a nice day. Dusted. I can see why Michael gets excited about this stuff. So now you want to see the next level above you, which is that fair value gap daily imbalance there. And remember, we're looking for 50% of that range from 11 o'clock. I gave you the reversal at 11 o'clock. We had one price leg, second price leg, finished. Fair value gap fill here. Right there at 748. Bang, done. Looking for that consolidation to get taken out to the upside. Remember, we're looking at that whole range from 10 o'clock. Or from the low started up here. So let's pull this fib tool from here. Remember, we're talking about 50% of the range. 50 to 62% retracement from 11 o'clock. We called this here. There's 50. 62 will be up in here somewhere. And if we just keep climbing up and lunch hour takes out that old high, my friends, it's magic. Or is it the algorithm? Or is it that boardroom meeting that they had today that said, nope, we've taken enough orders. No more for you, sir. We're going long now. Once again, proof that there's an algorithm, my friends. This is a 15-second chart. It's magical. There's your 1-minute chart. Time of day, time and day, my friends. I think that's going to be it for me. I hope you've enjoyed your session this morning. I hope you got something out of this. And I hope you get to see, once again, proof that there is an algorithm and how you can stay on price action, even down in a 15-second chart. You can find yourself setups. You've been given probably 500 or more handles today, and that's not an exaggeration. Go back, watch the video. You'll find exactly where we gave you entrances and exits and reversals for 11 o'clock all the way up into a present range. And that's 500 and, well, we're looking at 200 handles already just in the reversal. And you've had 400 handles, almost 400 handles on the way down and another 200 handles on the way up. It's crazy. Crazy day. Lots of fun Tuesday, Wednesdays, my friends. You too, Lauriston. Take care, buddy. All the best to you. Hope your vacation's, you're still enjoying a good vacation. Don't get too hot in them fires. Keep your stick on the ice, my friends. Splash the like button to help them out. Thanks. Thanks, Shepard. Appreciate it. Yeah, that's it for me. So keep looking for higher time frame objective. I like the this little fella up here. I'm going to put that as my objective for the day. I'm going to stretch it out so I don't keep doing what I always do. And that's the upside objective for the lunch hour. If 62% doesn't give us our reverse, I do like this has all been well delivered. If we can get back through this opening and find support, look for that. If we can get on top of that, we're obviously going to run for the highs. They're so close anyway. You can come back up into the regular trading hour gap again and see if we start getting a bigger dig into this. That's my my idea for that for the day. And until tomorrow, thank you very much for tuning in, and I will see you guys bright and early tomorrow at 9:30, 9 o'clock New York time and 7 a.m. in Canada time. So thanks very much for tuning in.